Right, so welcome to the India market review for the week ending Friday, 3rd June 2016. So in the post that went out today morning about this IMR, I had mentioned about a couple of big events that are going to happen in the next few days, and on the basis of which we have this title for the session today: big events ahead, time to be careful or to take positions. So what are these big events that I'm talking about? Let's have a look at that. And essentially what I'm referring to is what you should be seeing on the screen right now, which is the um, meetings that are coming up in the next week. So one small um, inadvertent oversight from my side. So I had said Yellen and Rajan, and I was referring to she's going to give a talk tomorrow on the 6th, and then we have the RBI meeting on the 7th. The FOMC meet where they will decide on the next Fed rate is actually on the 15th, right? So there might have been some confusion on that in the post. I just sent it off in a bit of a hurry. Apologies for any confusion if that happened. So in the coming 2-3 weeks, we've got three big events, or the two big events, I would say. RBI meet on Tuesday, where nothing much is really expected to happen. The expectation is that Raghuram Rajan is going to keep the rates steady, and there's not going to be any cut in the interest rate. The week following, we have on the 15th Yellen's decision on the FOMC and what that will set the mood for the market. There's been a lot of flip-flop, as you probably know, about the markets taking the 0.25% increase seriously, not taking it seriously. Sometimes the markets have gone down, sometimes they've ignored it, sometimes, all sorts of things have basically happened. And then on the 23rd, we have the British referendum on whether they're going to stay within part of the European zone or they are not, So three events, and these three events could really, churn the market a bit, could upset the balance at least for the short term. And essentially, that's what you've got to really, keep in mind, that if those three events, for traders especially, could be potentially great opportunities or potentially great losses. So we'll just have to wait and watch, and we've got to see what happens, right? So with that, let's jump into what our charts are probably telling us. And the first thing to actually look at, even before I go here, is maybe just very quickly look at what's happening in the US right now to get a sense of just fitting it in with what we're going to do intraday now. Now what's interesting is, so you should be seeing the Yahoo Stock Center main page on your side, and if I just switch to Europe, please notice that Europe was all green today, across the board in Europe, and it's only after US opened about an hour or so back that Europe has come down. And if we look at what's happening in the US right now, well, one very significant thing actually is that the Nasdaq Bank Index is down 3% almost, right? So are the Fed worries back? So bank, biotechnology, financials, other finance are the main, sectors which have corrected the most. And then if you look at Dow Jones, well, small graces, the utility average is up 1.61%, quite sharply actually today, as you can see, but everything else down 0.5 to 1%, and on the S&P it's more or less the same thing. But this really hides what the Nasdaq sector indices are showing, that the banks and financials have taken a big hit today. If you look at broadly the other US indices, things are to some extent positive. The composite index is okay right now, 0.51% up. So mixed bag, but looks like the financials and technology, biotech at least, are the main concerns right now, and that's something we're going to have to just keep in mind for the short term. So I want to then look at our global indices before we get into India. So you should be seeing the chart of well, let me start with the S&P 500. So wow, so this is really cool. The S&P 500 has really scaled a new life high. So the broad market in the US, so this is not a live chart, this is not including today, this end of day till yesterday. And what's definitely a happy event is that the S&P 500 has made a new life high. Nothing very significant right now, but clearly after consolidating for about oh, sorry, missed it. Okay, it is not made a new life high. I should have zoomed out. So I do these multiple levels because, one sec. Yeah. All right. So now it should be clearer because sometimes you get this zone, right? So correcting what I said earlier, importance of looking at old data and making sure your chart lines are correct. Right, so if I zoom out too much, you'll see only one green line, but it's a thin line, and if I zoom in or zoom out rather, you see the thick line also. So the thing is that the S&P 500 has entered that zone. That candles, in my opinion, look pretty okay. The indicators are looking pretty okay. So the broad market looking nice. If I look at the Dow Jones, and then we had this potential breakdown. So those of you regular on IMR will recognize this uh, levels that we had pointed out. It actually did break down about 2 weeks back and then has actually recovered quite nicely, and definitely not near its life high yet, but not very far from it either. Now, one of the things to keep in mind is when a breakdown happens like this, but there's no follow through, you have to think about whether this is a potentially false breakdown, and when things start to go up, whether they're going to actually start to go up with some strength. Okay, so that may not happen till the FOMC meet, but right now the downside is looking quite limited, all above the long-term moving averages. If you look at the Nasdaq itself, the Nasdaq index also just basically a copy, but has done definitely much better. So that's definitely a healthy sign. And wow, okay, okay, now I haven't looked at it for a long time. Let me put my levels here quickly so that right, all right. So that's the life high at around 5,200. And what is important to notice, I would say, about the Nasdaq right now is right now. Okay, I mean as in Thursday, this level is, I would say, under threat. Now, of course, there's no follow through today, but this is a level to definitely watch out for. So that's a level I would keep a eye on as far as the Nasdaq is concerned. So uh, in spite of the bad start on today's market, as far as uh, um, the banks especially are concerned, this itself is looking pretty good, right? So that's the US review. If you look at Europe, look at DAX, and same story, right? Remember, we're looking at daily charts, consolidation for 2-3 weeks, big jump. Seems like one small correction right now going on, and today was healthy, remember, and we've slipped basically because of worries in the US. Go to CAC. So the CAC, quite a bad performer for a long time. There's a strike brewing in France, labor reforms which the labor guys don't like. The president is entrenching himself. He's saying he's not going to take the new rules back, more pro-corporate. So we'll have to see. I mean, all these things tend to be temporary, of course. So really can't see any big negative right now, but if that strike takes traction and more people join, then you're definitely going to have trouble on the cards as far as the CAC is concerned. And then coming to FTSE, so well, that also is just going sideways. No sign of anything about Brexit or the referendum right now, but that's still 3 weeks away. And what's interesting is the camp which was pro Europe and wanted to stay in had quite a significant lead till about 2 weeks back, and then most of that lead has now disappeared, and the guys who want to exit seem to be almost neck and neck or maybe slightly edging ahead. So a little nervous times ahead in terms of the British market, and indeed I think that would spill over to the US global markets also. Okay, so Europe, US, overall from a multi-week perspective, multi-day perspective also, I would say biased on the upside. Really no sign of weakness in indicators or anything else. And today's bad opening on in the US plus its negative fallout on the European stocks. Well, if it closes badly, then we'll definitely see a follow through of that on Monday, probably across Asia and definitely on India. But really nothing out there really to worry about particularly. Okay, so the events are there, and I would best describe the markets as sideways to maybe biased on the bullish side. So you should be looking at the NSE 50 round, right? And this is the charts including today, obviously. And if you look at it, we attempted to go up today, break the 8,200 mark, which was pretty critical. So the 8,000, 8,100 gone. Had a big massive move, 3 days of consolidation, an attempt to actually go up today, and well, towards the end of the day, a slight sell-off, and we actually closed very flat. We closed 0%, and how many 3 points up or something. So this close was 8218 or 8219, and this one was 8220. So basically just a point here or there. So markets looking in a, I think, consolidation zone. The indicators, if you look at them, are looking pretty okay. Volumes have picked up on the upside. Today is red volume bar. That's just because we are just a shade below Thursday's close, but for our practical purposes. So a lot of volume, a lot of churning, and some other data which I don't have here to show you, unfortunately, right now, is about FIIs buying a lot of options in the market, of approximately about $1 billion worth of options of both, of course, mostly index, and it'll be interesting to see how that is set up. So right now things being positioned for I would say the events going ahead. So overall looks like wait and watch, cautionary approach is what the market is doing, and will probably just react to the events. So it's either So again, when you're talking about events, you're talking about the RBI policy immediately, where nothing much is expected. So essentially, the banks and the banking side, the NBFC side, and anything which is rate sensitive, that like realty and all that, is what one would say um, 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 is what one needs to really pay attention to. Otherwise, the long-term story, in my opinion at least, seems to be pretty much intact. And what I mean by the long-term story is essentially, if I look at this whole thing in a weekly format, then we seem to have done an important multi-month, five-month correction from its life highs of around 9,100 to 6,800, and now another intermediate bull market is very much on track. Well, that's at least what it looks like right now. Okay. You can see very clearly in this weekly chart, just to highlight a few things, is that the green candles are long and strong. The red candles are there, but as you can very clearly see, in size and proportion, much smaller than the green candle. So it tells you very clearly that over a multi-month period what the mood of the market actually is. So if you're a longer term investor, as in 6 months plus at least, probably 1 year plus, technically things are looking good, and one should be looking at getting in on any good dips that you might get. For a trader, however, the next 3 weeks, like we already discussed, I have important events, so you need to um, be careful and maybe have your stop losses in place, etc. So be very clear whether you're looking at it from a trading or an investment perspective. So since we didn't do IMR last week, I would want to today do a quick review of the entire market and see how things are and various sectors. So let's do that. So that's Nifty in the daily format, Nifty Junior, right? So Nifty Junior and Nifty more or less, the similar picture. Really nothing much. So whether it's the large cap or the mid caps, more or less in the same space. Look at the CNX 500, that's also very much in the same space. So the broad market is also very much mirroring the major index. Bank Nifty, well, that's one which has really, I don't know to say surprised, but maybe one could say that with that big, a lot of news around PSU Bank, NPAs, etc. Things looking quite bad. It has scaled back 17,500, took support there 1 or 2 days, and then today has actually gone up higher. And there's a Citibank report which you can find on Money Control, which says that they feel that the worst NPA peak is over. So NPA write-offs will continue for next many quarters, but not at the high levels that we have seen in the last 1 or 2 weeks. Now, of course, these things change, but that's one important fundamental long-term thing to keep in mind, that the NPA losses could become less in the next few quarters. Also, same thing as I discussed as far as the Nifty is concerned. If you look at this Bank Nifty from a weekly long-term perspective, there's been a pretty decent correction from 21,000 to 14,000, on a multi-week, multi-month, multi-year basis, and looks like we are now, headed up. So you've got this big, fantastic move from 14,000 to 16,000, 3 weeks, 1 month of consolidation, and then bang, it just moved out. You can see this nicely. Another week of consolidation. When RBI FOMC is out, looks like the trajectory is more or less up. Okay. Let's look at, where's the PSU Bank Index? I had it here. Yes, so here it is, PSU. All right. So you can clearly see that, the PSU Bank Index is actually in a completely different place. If you even compare just the last 4.5 years that this has been around and compare that to, let me just put the levels here just for quick reference. So you're talking about from 4,600 to about 1,800. That's a massive fall. Say 2,000 just for convenience sake. You're talking about more than a 50% fall that has happened in the last 4 years. And if you compare that with the bank Nifty, you're talking about in the last similar time period an actual massive gain. So when I say massive, you're talking about almost 100% gain from 11,000, 21,000 correction, and then on its way back up. So the PSU banks have clearly underperformed very badly. And if the PS, like I've said this for the last few weeks, if there was a PSU bank index traded separately and a private bank index traded separately, I think we'd see some very interesting market action. But anyhow, that's fantasy right now. We don't have it. But if you look at the bigger picture and go back to PSU bank, um, possible that we have hit bottom. We've got a really solid double bottom in July of 2013 plus the first quarter of 2016. That's a good double bottom at around 2,000, 1,900, right, 1,920, and this correction, well, whether it is now going to go up, looks like that, I would say. If we go down to daily, then this gap here, well, almost closed. Huh? Whoa, just hold on a bit. Did not expect to see this. Okay, let me just remove that. Right, so if I put that here, right, I wouldn't say the window is really closed, but that's not bad actually. So if you look at this closely, let me zoom in. The high of this part is where so the high is 2098.7 and the low here is 2113, right? So about 15-16 points that the window is not closed, but I guess from just a practical perspective, you could consider this to be a closure. Just 15 points down to 2-1 would have just been so fantastic. A closure of the window and then back up again. And well, guys, and on a daily basis, remember, you're clearly seeing a flag here, right? So you're seeing consolidation. So this month has been a consolidation month for PSU banks, run up from 2,100 to 2,400. So that's about almost a 18% up move. And who knows, maybe next week after Rajan, we might just see the next another 15% up move, probably 2,600, who knows, right? So while we are on the subject of RBI and Raghuram Rajan, a lot of speculation going around about whether he's going to get an extended term. There's some news that he doesn't want an extension and he wants to go back to the US and do academics there. There is talk about Modi apparently being a very staunch supporter of Raghuram Rajan and keeping the peace, and that Modi may actually very much prefer to have Raghuram to stay back for the next 3 years. Well, we'll have to see what happens. There are also these rumors that some businessmen who are unhappy, big businessmen, who are unhappy that he has not reduced rates are behind an effort to oust him, about Subramaniam Swamy's rants against him are motivated to that extent, and all sorts of stuff, right? So I don't think we've ever seen this much controversy and ifs and buts about RBI governor before. So let's see. Some people feel that if he is asked to leave, they will be, or not asked to leave, rather he leaves, there will be, some temporary small setback to the markets. Others are like, we'll get a more pliable guy. On the other hand, if he gets an extension, the markets might cheer and say, fantastic job, and thumbs up, and markets go up. So I'm not sure when that is scheduled, but you could get an announcement in the next few weeks about his future, and he might make some statements. So apparently he has made a statement to Bloomberg that he's not interested. Well, I don't know. Not that I'm an expert on this banking and all that, but if he doesn't continue, I'll definitely a loss to India and a gain to somebody else. I think more or less most of the people who observe and are experts in the area completely agree that he's done a very, very good job. Especially if you look at two things. Inflation, I don't know. I don't want to comment on that, whether RBI is can be given or take credit for it. But on the issue of foreign exchange and the forex rate of the Indian rupee, definitely you have to give him all the kudos and bow your head to him. If you compare how the Indian currency has stayed relatively strong compared to many of the other Asian and other emerging market currencies, we could easily have been at 75 rupees to a dollar, I think, right? If not 75, at least 70, 72, and that's not happened. And some good, in some ways good, some ways bad, but I would say overall, I think great job, right? At least that's my summary assessment of all the reading that I have done. So let's see. So that's probably another event you should add to all the three that we discussed about his stay or not. Okay. All right. So question answered. So one of the questions we had put up in the IMR was, are PSU banks a good place to buy? If you just to revisit that and complete that. So number one, remember this amazing important double bottom that you have on the PSU bank right there. Okay, almost a tweezer's bottom, and then you've got, so that's on a 3-year basis, and then right now after this correction from about 2500 to 2100, you've got this up move and a flag, right? Now, and anytime the flag could really break out. If you look at it on a weekly basis, you can really clearly see that's sort of a small correction, and then we are probably headed higher. So that's my view on the PSU banks. And given that huge underperformance, if you like to get into potential, what would I say, fundamental turnarounds with a lot of pain and events that will happen, consolidation, recapitalization, maybe some more really horrible quarters like Bank of Punjab National Bank and BOB, and some more shocks coming out. You never know, right? So we'll so after keeping all that in mind, if you take that risk, you might actually do very, very well. Who knows? Okay. Right. So that was the PSU bank stuff. All right. Oops. All right. Let's look at the other sectors. Energy. Right. So this is definitely looking, in my opinion, good. Right. I think one of the things you're going to see today on a lot of charts is a strong red volume, but remember that it's just an iffy thing, and there's just a lot of consolidation that's going on, or and probably things setting up for our next up move as things stand now. This is a weekly chart, CNX Energy. You can see the consolidation for, well, August last year to now, on the verge of possible, nice up move. So that's a level to keep track of, I would definitely think. Right, and if you look at it on a daily chart, then you can see that today was actually not bad, right? Move up, consolidating, all the long-term moving average is very tightly bunched right below, so excellent support. So I would definitely keep energy, as a potential a place to go long, looking good from a risk perspective, very low chance that it will go to break down, and if it does, very high chance it will bounce back up, so if you just hold through it. Looking at FMCG, right, so ITC has done some amazing moves last couple of weeks. FMCG is sitting just at the crux. You can again see this, up move, gaps, consolidation, flag, and sitting there 21,000. And if 21,000 on the FMCG index breaks, then 21.6, 21.8 is definitely on the cards. And oh yeah, I completely forgot to mention monsoons, right? So not really, if anybody has any news on that would be great. Well, it's not raining in Bangalore yet, but the weather is nice. And there was some talk about a week, 10 days back about it being a week or 10 days late. So are we on track or have things happened? If anyone has any update on that, just shout out and let's discuss that. All right, so FMCG looking good. All right, so in spite of the drought, rural economy and all, if the rains come, that would be a huge relief. So that's another plus point potentially. Then we look at infra. Wow, look at that. Just another flag perhaps. Okay. There and there. Okay, so this is a massive flag, 2,600 to 2,750, 150 points. So infrastructure looking set to definitely move up. Then CNX IT, that's another sidewards consolidation, I would say. Right. So up, looking good, and could just shoot off to 11,700. So IT is also nice, though quite far away from its life high, though many of the IT stocks are very close to the life highs. Then let's look at auto. Auto is just run off. Again, this is in a much bigger time frame. We're looking at daily charts. You can see how this and then another 2 months of consolidation and then came to the long-term moving averages here and then just shot off from there, and you can see the gaps again sitting there doing a little bit of iffy stuff, long lower shadows, long upper shadows, but as far as the longer term is concerned, weekly chart, you can clearly see how there is strong upside momentum on the auto index, right? So auto on dips would probably serve you well to be invested. Took my chances with an Ashok Leyland trade the other day, and while it was a really bad one or like half a day, and it just tanked 10% intraday. Next day, pretty happy, just recovered so nicely and made a decent buck. Could have gone the other way, but that's I mean, you take your chances, informed chances, informed positions, and go with it. Okay. Consumer durables, whoa, what happened? So this is the first one we're looking at, just a big fall. Not sure on what account this is, but okay, consumer durables looking really weak. Capital goods. So 25, 26, just wondering if I've missed out anything. So this is on account of LNT, right? Went up 10%, opened 8-9% up and went up 12%, right? Some 5x increase in profits or something massive like that. And then that's the whole space is now consolidating, right? So no way to have known that would have happened. This event, results came out after market hours, and the next day it was like boom, boom, boom. Okay, so capital goods driven by LNT looking nice. And then FMCG we did. Metals, yeah. Metals, okay, so the metals have come to an important level there. Oh, I wanted to extend it, sorry. Yeah. So at a tweezer stop almost, and should probably go up only. I shouldn't say only, but should probably go up once it breaks out of that 8150 zone. Then metals could really rally much higher. One of those spaces which have been beaten down massively, and any catching up to their life highs is already is a multi-bagger, has to be a multi-bagger move. Lastly, looking at the realty space, so DLF's been hitting day highs of late, and so all that Robert Vadra thing and all that doesn't seem to be an issue anymore. It's all, I don't know, should I say forgiven, not forgotten, but forgiven maybe, I don't know. And so that's looking pretty okay. You can see that the red candles, which look pretty strong, don't seem to have much follow through. So it'll be interesting to see on Monday. So after every red candle here that we've seen, we've had a green candle except here, right? So on Monday, do we continue that trend or do we correct a little bit more? But the long-term moving averages have turned up, so things are looking much, much healthier. Okay, so that's with mm, reality, and that's it. So I think across the board, not I think, clearly across the board, we are either in a consolidation zone or we are trending up, except for the consumer durable space, which we'll just ignore for now. Um, Everything else is looking very healthy, and that's, I think, definitely a big plus, which basically brings us to the conclusion that as far as this particular question is concerned, big events ahead, time to be careful or take positions. Well, technically, I would say take positions, right? Take positions, stay invested, get in. And I'm saying this from a multi-week perspective, not from a trading perspective. Each of those events have their own particular risk attached to that. That's the thing to keep in mind if you're a trader. But looks like these big events have really not caused any much concern in the markets right now. At best, it's just consolidation, sideways moves, and we'll just wait and watch and see how they play out in the days and weeks ahead. So just to reiterate, stay invested, and if you're willing to take the risk, put in more money when and where opportunity arises. So with that, what I would do is just do a complete review of the Nifty stocks, right? So we'll go sector by sector. Some are really looking interesting, and maybe I think in this IMR I have to give a few disclaimers because I have a few positions on some of these. All right. Okay. So ACC, and I have to give you a disclaimer up front that I'm long on it. I have been long on it for some time now, around this levels, uh, and yeah, it's looking quite nice. Today's or yesterday and today red candle is at, you can clearly see 2-year, 3-year, oh, multi-year level, right? So that's something I sort of miss. So glad I'm doing this. Right. So from 2012 onwards, seems to be that 1650 is a, sorry, 1550 is a level to watch out for. And until and unless there's really some, concern going forward in order to make that go down, I would say that it's just like we already discussed, consolidating. Ah, this is interesting. So very large volumes. Not sure what to make of it. So on the up move here, you've got nice volumes, so that's good. Today's very large volumes, block deals is what I'm assuming. I hope that doesn't set us up for any fall next week. But if I was a trader, well, not really a problem. I would definitely look at going long only on any dip. This is not a chart to short at all, and on a dip, so maybe even to 1500 psychological mark, that might be a good place to go along, and one has to really be patient for it to break 1560. It did threaten to do that today, but really wasn't able to. But if it does, and then obviously good volumes, then quite possibly in the next 1 or 2 months the life high is in sight, so which is like 1750, 1800, and after that we'll review. So I'm basically, well, looking forward to 1750. Some corrections will happen along the way, but 1750, 1800 in the next two months is, I think, plenty possible. Ambuja Cement, right? So you can very clearly see very similar setup at a resistance level, again from 2014 in this case. So this is relatively an underperformer compared to ACC, right? But this is a nice flag, right? So if you missed a move, then this is definitely something you can consider. So the top resistance line, that would be the flag. A fall below this, which is at 226, 225. Well, as a trader you should exit. However, the problem with this one is that you've got a lot of good support below, and at any point it could just take support and move out up. Once it's above 235 on good volumes, then this will probably do 250, I think, quite easily, and then 280, right? That should do. Oops, I thought I'd organized this all right. Ultra Tech. Oops. Alright, so Ultratech Cement, the other big major cement player. Right? Actually, this one is not very far from its life high, relatively speaking. So from a relative outperformer perspective, this is definitely outperformed. Today's high volume down move, you can see very, very clear consolidation for the entire May, an attempted breakout in mid-April, but otherwise April to May, good consolidation. Once it breaks 3300, then I think 3400 should happen very quickly, and after that 3500 should also not really be a big issue. So setting itself up for up move, triple top at 3400, please note, and if the triple top breaks out, then you should see much better moves up. I'm just wondering, just a thought, whether the monsoon could be a trigger. If we get good monsoons, then, well, rural economy, usual wealth creation, cement use, etc., and that could be a trigger for some of the cement stocks to really go up much higher. Okay, so that just also look at, it's not really a cement thing, but still, since it's a big part of it. Grasim, right? So Grasim actually at a life high, so that way this one is doing way better than the others, and volumes also clearly, I think, in support of things moving forward up. The only thing is a negative divergence here. Okay, so you've clearly got that versus that, right? So wouldn't say, at this point definitely can't say that the divergence has really been corrected completely. You would want to sort of wait and watch and see how that plays out, right? So let it fall below that. The RSI 64, not 64, just below that, so that is 62.2, and maybe Grasim could come down to about 4200, maybe 4250, and that might be a good time to buy. A little caution would be advised here. You can see that a lot of sort of spinning tops, doji type candles, but here's the thing, you've got to be quick to get in, because suddenly you'll get an up move like this and then sitting and waiting for more, and that doesn't happen, and that's why it's so tough from a trader's perspective. But from an investor's, just buy. And or if you're looking for breakouts, then Ambuja ACC will serve you well. Okay. Next, I'll come back to banks and all that later. Asian Paints, so new life highs for it consistently, just going up and up and up. It's crossed 1,000. Wow. Okay. Somehow missed this. Okay. So at some point there should be a retest of this. And how counterintuitive some things can be. One would think that Asian Paints would go down with increasing crude oil prices, but you can clearly see that actually that's not the case. It's done extremely well, gone breakout to where it is right now, and it has done that on really nice volumes. Okay, so 900 to 1000 in about 3-4 weeks. That's really nice. Small correction here, right, very clearly on low volumes. And then, I mean, this is textbook Doe theory. You could screen capture this and paste it directly into a textbook of Doe theory. It will just be so great. And the volumes you can see are actually still very strong. Consolidations will happen along the way, buy on every dip, and well, let's see, 1200, 1250 are definitely potential candidates for Asian Paints. Okay, Bajaj Auto, so very close to its life high. Right, very close to its life high, looking good. Again, you can very clearly see healthy volumes. Consolidation going on right now. Look at 2700 breakout, or for that matter, just buy on dips. 3000 on this stock, Bajaj Auto, should easily be possible in the next. That's a 10% move, by the way, more than that. Next quarter, let's say. But that's really nice. And if you can hold that through futures or options, and that's quite a lot of money to be made. And Hero Motors, so well, that's also at its life high or close to that, rather, just like Bajaj, right? So most of them going up in tandem. Very similar prices, not bad. So 3,200, 3,300. Once it breaks 3,300, 3,500, 4,000, who knows? Right, so this has been 2 years of 2.5 years of sideways consolidation between 3,300 and 2,400, and okay, yeah, looks good. I think looks like it's gathering steam and set for higher moves. All right, so notice this. We've got tweezer stop. Let me make that better. Right, so we've got a tweezer stop there, and a breakout of that. Yeah, attempted breakout today. So fine. Sorry, let me. It's not a tweezer stop, but close to that. If you want to fit in, you'll fit in a lot of things. But if I take the closing prices, then that's where you are, and that's strictly speaking not a tweezers. You need to look at the highs or the lows, but yeah, that's there. And anything on the correction side should be used to get in. A lot of volatility today. I doubt that a lot of the volatility was anything to do with any particular stocks. It's just maybe fear of the markets. Maybe it was towards the end of the day, markets feeling jittery about the next week and doing a sell-off. Right, but this is set to probably go up. So Bajaj and Hero looking good. So while we're at it, we will finish the other auto stuff. So Ashok Leland, there you have Ashok Leland. So some interesting stuff happening on this. I've been tracking it very carefully because I had a trade on it. Now I don't. Is these big red candles event driven? So this was on account of results, wasn't it? yes, results, and they took a unexpected hit, impairment. You would remember me discussing about it, perhaps. And then that just fantastic recovery the next day, 10% down, 8-9% up next day, net rate goes up, goes to 112, and I was out of the trade at about, at those levels somewhere, feeling like a dog because it went up there, and I, sort of missed rolling over, and then, emotions being emotions, again came down. It was like gone. Thinking maybe I should get in again, 105 psychological level and all that stuff. Two big down moves like this, sometimes you start makes you wonder. So, and all on good volumes. It's sorry, good. Yes, good volumes and important events. So indicators wise, this volatility is huge. It's massive, but well, you've got to take it in your stride. Other just take it in spot, and well, this could, once it breaks 115, 125, 140, 150, any of these are possible this year. Recoveries like this after big falls just indicate inherent strength, in my opinion, and that's something not to forget. Except that this time around, there's definitely been hesitation. You don't have a massive recovery like this, so just to best to, I guess, be a little cautious. But once it's past 112, 114, definitely good stuff. Maruti. So Maruti Brezza has had some exceptionally good sales. Okay, I think better than expected. And Ford has freaked out a bit. You've perhaps seen the new Ford ads on TV, very colorful. They're spending 200 crores on that campaign. That's a lot of money, right? And the Figo and the EcoSport sales have definitely taken a hit in spite of the 1 lakh plus drop in EcoSport prices. Looks like not any much, what do you say, reversal in its fortunes. And on a day like this, when many of the other things were bad, you can see green candle on Maruti just shows you, strength. Some tempering of volume, but on any what do you say, correction, Maruti should definitely be bought, right? 2 days back, 3 days back, there was a fire in Subro's factory, and that was, news came out, that was the correction that you had. That's it, and people just bought it that very day and the next day, and it continues to rise. Now forget all that. You can also see very clearly the short-term moving averages which are stacked up here are very clearly um, strong and bullish, and from that perspective, technically, all buys. Where would the stock go to? Well, 4.6, right? 4.6, 4.7, and again, after a decent correction like this, from a intermediate perspective, once it breaks 5,000, this will go much higher. So just 2014, it was about 1,200 rupees. It's almost already a 3x bagger, and possibly a long way to go. Of course, all this drama that is going on about the green NGT, diesel bans and all. So this is probably one company which is well placed to ride that out, good mix of petrol and uh, mm, uh, if that diesel thing implements, then petrol, they'll be able to quickly move back. A lot of other companies have made massive investments in diesel, which they may not be able to shift back to petrol as swiftly as perhaps Maruti can. So that's definitely one advantage. But if you've heard about so what some of the cabinet ministers are saying, that all this diesel ban doesn't really make it doesn't make sense. Well, I don't know about other things, but driving around the city, I can definitely say that it'd be good to have diesel ban. And it's the number of cabs and all of them on diesel, it's really bad for our health and our family's health and all that. So from that perspective, I'm quite happy to support a diesel ban. Just leave it for trucks and heavy vehicles, and well, if you can afford an SUV, then you can afford petrol for it also. Okay, so Maruti, yes, so saying 4,000, 5,000, I mean sorry, 5,000 very much on the cards, buy on every dip, and just hold on. Next 6 months, you'll probably see good moves. Okay, then Tata Motors, so that was another big, that was really a bad miss for me, I must say. Though I don't have a trade, I must say that from an emotional perspective, I should have a disclaimer on it. I'd made a call on this to, get in without even bothering about results, and well, how expensive just 1 or 2 days of just somehow not looking or looking at other stocks can be. Well, this is where I had said one should probably get in with at 400 bucks. Now it's at 450 and I don't have a position, up 10%. And it's looking like a flag, saying, well, let it correct all those emotional dramas. But, if it breaks 460, 465, the stock is going to 500. Right? So massive increase in its profits. Yeah, this one was the one. I said it for something else, I think. I forget. So this stock, 500, is what I would look at. If that window closes technically, then that will be a good place to enter. But yeah, 500 is definitely where I would want to get out as a trader, then maybe review the chart again. Right. Again, please notice how long-term moving average is providing plenty of support for about 2 weeks, and then just another big move happens. Anything we've missed? Autos, yeah, that's it. Going back to list, we'll come to banks in a little while. Let me just finish off some of the other. Bosch, right? So Bosch, 19,000 to 22,000, right? So, well, okay. So this has made another massive correction from 28 to 16, and is now going up. You can clearly see higher tops, higher bottoms. All right. So, right. So, yep. Some consolidation happening on Bosch right now, but again, from I think investors' perspective, at least 25,000 psychological number, if nothing else, and then we'll review after that. But 25,000 very much on the cards on Bosch right now. Nice double bottom here at 19,000, and a nice healthy up moves with decent volumes. Okay. Sorry, I forgot M&M. Okay. Well, M&M, what do you say? Just say consolidation. 2.5 years of consolidation. Does it move out this year? Let's look at monthly charts. Okay. Very rarely look at monthly charts, but yeah, that's where we are right now. And that. Yes. Now notice a couple of things. Pretty good long lower shadows. Every time it fell in the last 2 years, it has been bought back consistently, and I think below 1,200 it represents really good buying opportunity. You don't really see such massive, you don't see, except for here, long candles, and it's gone to 1,400, and this is perhaps a good place to to enter. Uh, in case it comes back to 1200, 1220, that's definitely a good place to enter. Should you get in right now? Well, TA says be patient, wait, let it break 1425, and then we'll review. If I look at the shorter term, however, in the last few months, and if we trying to see if we can get some clues from volumes or indicators. Mixed picture. It's definitely say that earlier there was high volume selling, and there has been some good volume buying, and then again consolidation in the whole of May. Big volumes here, big volumes today. Little iffy, but if you went with the overall sector flow, this should also break out. One of the things about these guys is, of course, their tractor business, and they've launched some new series, new range of tractors. Some first time I'm seeing actually tractor ads on general channels on TV by M&M, and if the monsoons do well, that should be another plus. And that's probably a company with a lot of hidden secrets, plans, technologies, market. Been very savvy so far, and would not be surprised if we see further strong moves here. Right, so wait and watch. Right. Okay. Yeah. All right. Okay. Something happened to the list. Looks like I've got some other stocks here. All right. Doesn't matter. Uh, let's look at telecom. Starting with Bharti, some news today about Reliance Jio has launched a website inviting people to sign up for beta testing and all that. So, well, launches, soft launches anyhow happened already, and looks like a very slow, easy, steady ramp up that is going on. So we'll see. But so Bharti, at least from a long-term multi-year perspective, has done nothing from 2008 to now, and uh, till it actually breaks about 440 with some certainty, nothing to say, nothing in the volumes, iffy stock, I would say, and both from an investment and a trading perspective, really no reason to get into it. Would probably prefer to stay away. RCOM, though it's not a Nifty stock, right? Just want to have a look at it. And well, this is interesting. Big volume on RCOM 3-4 days back. Obviously, some sort of institutional, some sort of block deal, and it's close to its life low. Wow, that's definitely interesting. Where did that go? One second. Yeah, there you have it. Alright, so RCOM at its life low. Interesting. One thought earlier that it had rallied up, but look at the massive fall. Actually, nothing on volume, just 85 became 50, and now whether this life low is its final low or does it become a 10 rupee or a penny stock, it's obviously very tough to say, but just trying to figure out whether we have an opportunity here, or I guess it's too risky, so we leave it. Tough to say this way or the other. Technically, you would actually want to short this. Moving averages on the upside, strong red candles. The green candles are not really very strong, except that this week there's been some buying that's going on. Right, so 50 rupees. Hmm. Okay, no opinion. If I find myself thinking too much to try and say something, it's then not worth looking at. Okay, idea. So you must have seen my post today about idea. Yeah, so this was just a massive block deal. Some 3.5–4% of its shares sold, and whoever was selling it was clearly in a massive hurry to get out. Uh, so till this happened, it was seemed to have been trending nicely. Went up, hit close to the 200-day, came down, looked like was on a steady uptrend. Now you can't see the volumes building up on the buying side here, breaking medium and long-term moving averages steadily one by one, and then, well, just gone. Now, whether at 100, if it goes there next week, it's a good, you can see that double bottom there, right, around that, whether it becomes a good opportunity, or if 100 breaks, then, well, even 85 is possible. Okay, that's the thing to watch out for. High risk, so probably not worth you observe, but trade at significant risk if you do that. Okay, all right. Then looking at let's look at the other big one, LNT. So you can see. So first of all, if you're looking at this technically, even before this vertical line, you can clearly see it had been going up, the 50-day moving average going up, the 100-day also moving up, it doing multiple medium term to long term crossovers, took resistance at 200-day, came down, and then taking support. Mild breakdown, but and then there's a candle also, I mean lower shadow. Next day went up. That was enough for a technical guy. And then if you had taken that, then next day we'd be sitting on a very handsome profit. And another flag that is playing out. If it breaks 1500, then this is easily going to 1700 thereabouts, and then not very far from its life high of 1900. There's also some IPO that's going to come out, I think, of L&T Infotech sometime in the next few weeks. I'm not sure how that plays out for L&T fundamentally, but if L&T is holding something, then a divestment or an uptick in that would be a great opportunity for L&T stock to further go up. BHEL, so this one's been pretty went up to 130. Yeah, very unusual behavior. This sort of sideways, very small, falls in the market. Normally, you see big rapid falls like this. Okay? But what you actually see is very slow, gradual. I mean, if you flip this, you would expect these to be, slow green candles going up rather than anything else. But well, no. Uh, uh, Purely technical play. That green line that you see is the 50-day moving average. So the long-term moving averages are still sort of pointing downwards, trending downwards, and I can only say that that's the reason because of which it is having a downward bias. 131 is clearly important resistance, and only given this it should be bought only above 132, 134, and then again there's 150, 160 to deal with in terms of very strong resistance. Technically, it would probably be a good time to buy only after it crosses up all that. The dilemma is, okay, have you missed a big up move, or missed a big part of the up move? Now, if you're looking at it from a longer term perspective, then it seems to have taken very good support at 100, 2005 price also. And what you see now is just a correction on a multi-week, multi-month time frame. Maybe comes to 115 or even around 115, 110 would be that stock going down maybe even further to 105, 100. but if 110 holds and then starts its up move again, then you should probably see another 20-30 rupee move to at least 160 in the next 3 to 4 months. All right, so that is BHEL. So just to rephrase, the dilemma is, do you get into this correction? It's clearly a correction, looks like that. Right, you can see the strong green candles up, you can see the relatively weaker red candles down. So it's clearly a correction. Do you get into a sort of falling knife and then just hold on, and when the next move up comes, you're going to be pretty happy with the profits? Or do you wait for, real bullishness to develop, or let's say not real bullishness, more reliable bullishness to develop, but that will be only above 200, 220, but that means you miss this move from here, 120 to 200, which itself is a 50-60% move, right? So based on you, as in you having clarity about your trading, investing, you should take that call. For an investor, I would say get in. For a trader, not yet time. Wait and watch for some good support. Okay, so LNT, what else do we have in NMDC? Okay, so again, off its life lows, the overall force of the stock will be down technically. Okay, but, and this is weekly chart, nice long lower shadow this week. So this move from about 75 to 100 and then down to about 85 is, so that's your up move, correction, and are we starting a new up move again? Now there is, yeah, right, well, there you see it. Look at the volumes, right? Looking iffy, a lot of selling. However, there is one thing which is very clearly there, and that is a bullish divergence. Right, so that's a bullish divergence, and well, at least it gapped up today, so that's one important thing. So this is I know what, news driven, deal driven, so looks like 90, 92, 93 next stop, and then once that is done, it'll very quickly go off to 97 or maybe even 100, right? So this actually should be ideally green, but AMI broker doesn't support that sort of coloring, so it's an up move. It's red because it closed below the open, but it went up on really good volume, so nice big up gap at an important resistance level of 90. If there is any correction on this, probably a buy, and then 97, 100, 105 would be the next target on NMDC. I definitely keep this on my watch list. Since we're looking at metals, let's also look at the other stuff. So sale, okay, so really not doing too much. Okay, so big fall, 300 almost, 285 rupees stock, 40 rupees. Overwhelmingly, it is right now looking pretty weak. Now, whether obviously 35 is a bottom or not, I mean, those are questions you only answer in retrospect. But Okay, looking at weekly candles, looking at indicators, mostly not so much looking at volume. Volume seems to be a mixed bag. High volume selling, high volume buying also. But MACD clearly has bottomed out, turned up. RSI seems to be edging into the 50 plus zone and staying there, and this could really be a good good value buy. Now the way to play it, I would think, is um, mm, look at any fundamental news, because technically you should be shorting this maybe at around 48.50, or that's the limited traders upside. It has broken that downtrend line, but just not really anything very significant, and we basically mostly be going long on the idea that it's multi-year support 97 to now, bounced off of that, and it's unlikely to break, and from here it goes back. Well, if it goes back to not even its life high of 200 rupees, it's a 5x 5 bagger, and never know. Remember that it went from something like I don't know how much was this, 5 rupees to 40 rupees, 10x in 2003, just like that. But that was liberalization, and who knew that sort of stuff. Okay, anyhow, uh, 40 could be a good investors buy. Traders would be advised, I think, caution and to stay away from it. Tata Steel, is that, yeah, Tata Steel. All right, so this is definitely looking much better than sale. If you want to buy metal, oops, what happened? All right, buy Tata Steel. Okay. They also sold off their UK plant. Remember that? I think they took a pretty decent loss on it, but then yeah, that's sold and done with. Clearly good volume buying. Uh, Corrections on low volumes, again good volume buying. 320, good support. 330, 335, also good support. Immediate resistance at 360, so not too much of upside from that trader's perspective, but once that goes, then 400 and even 500 could become distinct possibilities in another quarter or so. So that's definitely looking good according to me. So Tata Steel is definitely a buy. Once it clears 260, 265, then 400, 450, 500 are on the cards. Stop loss for a long-term person below 315, and even for a trader, I think your stop losses should be a little wide. It could easily come down and then bounce up very nicely again. One other one is Vedanta, VEDL. Okay, so that's, you can see massive buying here. 2016 first quarter, all right, and now the concern is, of course, that the buying is really, the volume has really diminished, if nothing else only for this correction. Little bit buying again on the up move now, but the main thing I would say right now is that the stock is flirting with its 200-day moving average, the 200-day which is the red line there, and once it is able to clear 110, then you're going to see a pretty decent move to 120 or though. And just to remind you, look at these on the left side, these sort of strong green candles there, even one here and about 3-4 there, and that's the sort of potential up move that you could get. So 130 is the level I would watch for, and then review from there essentially. Okay. Uh, okay. Hindalco. So those have been regular. Remember, we've said metals buy long time back. Uh, so moved from 62 to 100, almost without any correction. Came down, took support on its long-term moving averages at around 87, 88, and then just jumped from there to 105 and 110, 120, 128 are the next levels to look for. Just be clear that you're probably going to have some volatility on this, both on the upside and on the downside. Look at this big down move, and then didn't go further, recovered, went up, then again you got one, almost one 15-20% down move, and then just one massive recovery just with a gap and on massive volumes. Again, probably news or event driven, but that's the sort of stuff that is going on right now. Okay, so Tata Steel, Hindalco, Vedanta would be all good buying opportunities. Okay. Okay. Some others. Yeah, to show you something that might be setting itself up for another big move is REC. And REC, the thing is that this yellow line and this what sort of pink line is a good support zone of many years, 2010 to 2016. You can see the many bottoms there, and technically that's a very strong bottom, unlikely to get broken, and if it does, it will be a very significant event. Put an alert. So still pretty bearish, right? You can see the steepness of how the moving averages are just sort of pushing it down. It looks like, feels like that, but maybe setting itself up for a move up to 177, 180, after which one would review, and 200 looks like at this point coming on the cards. Now that is almost a 25% potential up move. Okay, so that, and now coming to pharma. Okay, so you remember that we kept saying pharma mixed bag. So there is one mixed bag, really mixed. Sorry, bearish. First, really bearish stock that we have seen today. So Cipla, broken down, gap down, all that stuff, and possibly this could be a downtrend flag. Should not really be bought or go long on this. Right, so let's say around 460 is one level, and then around that, so it is 480 is another level. All right. Okay, and then if 460 breaks, then 425 is where some good support is. And so if the market does turn weak, then this will definitely be on your radar for a stock to be bought. And a good lesson here as to why tracking is important. The stock went off from 425 levels to what 600 levels in just under 2 months, then went on to make a life high of around 750, and now about 6-8 months later it's back to around the place where it took off, and that too it's being sold off on high volume. So something is definitely changed, both fundamentally and whatever. Not a good thing, and this flag is potentially another 20-30 rupees down. So keep this on your list for a potential short. Lupin, you can see that that is also looking weak. Okay, 1500 clearly important resistance, not able to break out of that, and possibly looking at 1400 or 1375 in the next few days or weeks. Okay, so then we have Dr. Reddy's, which is, well, again disclaimer, I'm long on this already, and this one is actually looking on the other side quite good, right? Consolidation going on in this stock for almost 6-7 months. Okay, and then you've got this up move of late since mid-May, going up. Looks like a small correction, could come to 3,100 thereabouts. That would be a good um, support zone, good place to buy. It's also the 100-day moving average. That's also a nice support thing. And then make another attempt to, 3235, 3250, which is the 200-day moving average. And once it is able to break out of that, then 34, 35, even 4,000 could be potential opportunities for this stock in the next 3 to 4 months, quite possible, right? So yeah, right. So looks like that, and good volumes on its way up. So long on Dr. Reddy's, Lupin, and Cipla look like they're good shots. Glenmark, another stock, right, which was looking strong but has just broken down. A strong red candle, unable to hold its moving averages, and then it was at 880. It's now at 809. That's a 10% fall, and today's volume probably making it worse and making it go to at least 800, maybe 775. So another stock to watch out for on the short side. Till about early last week, it was potentially a good buy, taking support with all the long term, but once it breaks down like this, then usually some more pain should be expected. Okay, so, well, Dr. Reddy's the only one showing strength. Sun Pharma. Okay, so that's also really cracked down. So, wow, this is interesting. So Sun Pharma had really gone up here nicely with its volumes, right? And not able to break out 825, and then just quickly retraces back to 750. Question is it going to 700? A lot of volume. So Dr. Reddy is the sole, what do you say, long guy, everything short. Pharma is again a weak sector. And well, maybe I should close my Dr. Reddy's long position next week, given that the overall sector is weak. It's become a higher risk position right now, and with the other jittery stuff in the market and RBI and all, then you want to not be too strong on the long side, at least in a sector like this, right? On the other hand, autos and other places are definitely good places to be long. Okay, yeah, power grid. So power grid broke out of a double top here. Again, disclaimer, long on it, and 150 psychological mark, right? That's a level from October last year, and overall looks like, or not just from 2008, looks like from a longer term perspective, all set to go higher. You can see up moves happening on clearly higher volumes, down moves on low volumes, and again in the last few days, 1 week consolidation flirting around with 150, that support zone at around 147, 148. Once it breaks 152, then 155 in the short term very quickly will happen, and then after that 157, 160. Could take what, 3-4 months to do that, and once it clears its life high, which remember, so the significant thing about power grid is that its life high is from 2008, almost the year of its listing, and if it breaks that, then I would say that's what, 8 years late, and big relief, probably some selling, but once that sort of double, maybe triple top gets broken out, then 200 could easily happen on this stock. Okay, all right. So you've got IT and banks left. Looking at Reliance next. Right. So Reliance, I know, crazy picture. I always prefer this weekly thing on this Reliance. And well, symmetrical triangle was there. Didn't really do a good job of sticking to it. Lot of volatility. Again, another disclaimer, so I am long on Reliance. Okay. And then this is weekly chart. Okay. So big fall from 1070 to 930. There is a gap there, and then big recovery, nice bullish engulfing here at 920, 930. By the way, 920, 925 multi-year support zone, right? So I'm not sure you can make out. Let me make it weekly. Oops, that's a lot of clutter. Yeah. So you can see that all the way from here, 2010, and then resistance 2012, some support, breakdown, resistance. So this is almost like 6 years multi-support zone, and this is a weekly chart, and it has essentially bounced off from exactly there, and volumes definitely not there, and it's going to be a lot of resistance at around 970, 975. Okay, that's also where the 200-day moving average is. On the other hand, it just sets it up for this possibility that it breaks through 980, 985, volumes come, and then suddenly it goes to 1,000 or higher. Looks iffy right now. If you're a trader, 975 would be a good exit. 980, careful watch, and anything above that, again, go long. I posted some news today about Saudi Aramco and the government of India looking at how they can open, retail petrol chains in India. Well, that's competition for your HPCL, BPCL. So it'll be interesting to see how they react to that, and for Shell also, and for Reliance, they have their retail outlets, as we know. Right. So Reliance, in my opinion, a lot of events both on oil, crude, refining, telecom, and this potential retail challenge. Okay for trading, not yet an investor's thing, I would say. So you'd prefer to wait and watch. Okay. Let's look at IT, and then we'll look at banks at the end, and then close the session. So we'll start with TCS. So TCS showing volumes lacking, but otherwise I definitely say showing quite bullish strength. That's the level that it's been able to take out 1,550, and then after that go up quite swiftly. Only thing, all these very strong red candles, very tough to predict. 2,660 right now, thereabouts. I would say 2,700 is very likely on the cards, and after it's done that, then volumes becoming a little iffy right now, then 2,800 should definitely happen. Right? Okay. Buy on dips. Wipro. Wow. So while TCS is looking all good, Wipro is struggling clearly. Being beaten down every time it goes near the 200-day moving average. It's come down to 540, and then has to go to 600. Very, very range bound, 1 to 2.5 years. Well, technically it's come to a pretty nice level to buy. There is a very clear level to watch out for a stop loss, and that would be below that, and that's, I would say, 517. So still a bit far away from that, but around 530. uh, if it does come there, 535, you would like to start buying into it. As a trader, when it goes up to around 545, 550, sell. As an investor, really no call right now. Still sideways. You could be accumulating that stock if you want. It's like 1 6-year support zone, because once it breaks 550, then you could really see it move very quickly to its life high. Okay, but technically TCS definitely stronger. Infi, well. Infi has made a new life high. Okay, so there you have it. Volume's not very much, not really there. 1,280 iffy, but 1,240. If it comes there, good support at 1,220. Unless there's really any compulsion to sell, one shouldn't. And um, I think 1,450, 1,500 would be the next natural place for this stock to go to. Okay, so that's Infi. And then the TCS, Infi, Wipro, yeah. Okay. Hmm. Huh. Let's look at energy, and we'll look at banks last. So GAIL, Gas Authority of India, you can see the nice consolidation that's happened here, whole of 2016, trying to move up, but nothing much happening right now. That's the support line, toying with that. I hope one thing you're observing over and over again in this IMR is the number of stocks at important moving average or consolidation levels. Okay, tough to make money in a market like this. If you're a trader, yes. If you're an investor, you just have to be extremely patient and wait. So this has come to a good support zone, could go down to 360, but if you're a trader, you could consider buying it um, with a very tight stop loss below 365, and if it goes up about 385, 390. Not really a great setup, but what would be a great setup is once it clears 400. Once it clears 400, then I would expect another. What's going on right now in this 1.5 quarters is consolidation, and once it breaks 400, then 450. That's a good 10% move. You should put an alert for that. Okay. ONGC. So ONGC seems to have clearly, I would say, bottomed out, right? This could be a good buying opportunity. Oil also seems to have bottomed out, definitely not going to $20 again, at least in the foreseeable future. This 210 seems to be a good level. Uh, Again, multi-year support. You look at it in a weekly chart, then you can very clearly see the bullish divergence on ONGC, right? And I think this is there on Kane India also. And hasn't really moved, right? So uh, build up, accumulation, all that sort of stuff going on. 210 on the lower end, about 200, that's the level. On top, 220, not going above that. So very slow, very frustrating, and then you could just get some re-rating that happens on the stock, and then it just moves up. Now problem is you don't know when and how much. So if you get into this, you could expect 10 to 20% upside over the next 3 to 6 months. You just have to be patient. That's it. All right, gain. So this is looking much better, right? You can see it's done an up move and now it's doing a consolidation. Technically between ONGC and Kane, I would say buy Kane. Nice stop loss below 133, 132. Once it, and unlikely to go down there right now. You have traders 138, 137. 150 is the first level to watch. When 150 goes, then 170 is quite likely to happen on Kane. I like the setup. I mean, just qualitatively speaking, not quantitatively, it looks good. Volumes, bit of a concern, but I won't be surprised if they pick up once it crosses 150, and definitely after it crosses 160. So both from a trading and investment perspective, this I would say is looking quite healthy right now, technically speaking. BPCL made a new life high today. Yep, or last few days, and going higher. Yep. So BPCL, so oil and gas up moves are not over. 1,000 rupees, got used to that. That's a flag for you. So 930 to, yeah, that's about 50 bucks. I would say 1050, simply round off, then 1075 to 1100 is what's on BPCL. In the petro, same picture, except that this one has not come to its life high yet, right? All of us have our biases. If you like things that are a little bit of an underdog, not performed, then you would be comfortable going on with, HPCL, BPCL. Nice up move. 900, 950, 975,000 is very, very likely on the cards. Again, 1 month, 1.5 month of consolidation, and then bang, right? So that's what patience gets you. Okay, that's it as far as energy is concerned. Yeah, let's look at NTPC and Tata Power. NTPC, well, now trending up now, and seems to have broken or breaking some important levels. Right, so once it breaks 150, right, then 160 is possible, right? 150, then 160, yeah, should be possible. Weekly chart, 165 looks very likely. 3-4 years of downtrend, 2 years of consolidation, and then yes, got a little excited because of the weekly volume candle that you see here at the end. Definitely some accumulation and buying going on, and from that perspective, one could get into this with a 165 easy target. Okay. Tata Power. Okay. 80, that's good support at this double bottom, which is also from 2006. And then you've got some nice tweezers bottoms, weekly chart. Broken out of that 70 mark. This could climb slow and steady, 85, 90, Just have to take it slow and okay. It's okay, but nothing great. Okay. Okay, so let's come to banks and then we shall close. We'll start with the public sector banks. HDFC, it's not a bank of course, but HDFC. Right, so you can see, broke out, moves up and down, and then has gone broken out of 1240, made 1270. Looks like it'll just continue and go to 1320, and it's really, I think, its next stop. Okay. Yeah, consolidating as you can see here last 3-4 weeks, and then should probably go up further to 1340. So that's HDFC and then HDFC Bank. So that's made a new life high. Right. So in spite of the low volumes, it's continues to be driven up. So that's a sign of a lot of strength. Volume has picked up again. Any what do you say? Correction should clearly be bought. Volumes are a bit of a concern, but well, you go with price 1200, not very far off, and then yeah, okay. So coming back to RBI risk and all that on Tuesday, quite possible that this comes down to back to maybe 1120 or something if something very unexpected happens, and then it'll go back up to go back up. So long term, definitely keep in mind that one should not be shorting this, and you can see this is something we've mentioned over and over again. The 2015 sideways consolidation, now the breakout. If you look at that, the measuring implication is not yet met. 1250 at least should happen on HDFC Bank. That way, Kotak. All right, so that's also broken out. Wow, look at that today. What an amazing move. All right, so Kotak, the entire weekly move. So sharp move from 700 to 745 and then 770 today. Wow, this is fantastic, and what a bad miss actually. All right, so again, this is been consolidating for quite some time. Okay, so not as long as HDFC Bank, but just for a year, and now going higher. 800, 850, those are the places to watch out for as far as Kotak is concerned. Clearly doing this, let's look at volumes, good volumes, right? This could be ₹1,000 stock in by the end of the year easily. That's another 20-25% up move from here. Okay. IndusInd Bank. Where is this? Yeah. So that's also gone. Right, 1,125. Good long move. So you can see that the private sector banks really showing strength. This one had broken out quite some time back and is still rallying up quite strongly. 1,150. Volumes have, that's the concern. The volumes have tapered off as you can see, but the price trend is very much intact. All right. Yes Bank. That's also made a new life high. All right. So cool. So all the private banks that we've seen going up, ICICI Bank, that's stuck clearly stuck and badly stuck, right? Technically, it's got to really break out of 250 for it to really do anything. 250, 280 is the next level. Will it actually go up or get beaten down? That's the thing. So good example of when you want to be long, sticking with strength, and clearly the other private sector banks apart outside of ICICI looking much better and moving much better, right? So this one could go up, but a lot of risk associated with it right now. Okay, but if it does, then a very good trading opportunity from current price to 280 exists, and once 280 goes, 300, and then might play catch up with the rest of the private sector pack. Okay, so that's private sector, all of them, including I would say ICICI, good ones to go long on. Okay, let's now look at our State Bank of India, and right, so this is the sort of triple bottom that you see. It was at 150, now it is at 190, 30% from mid-March. Big gap. Look at that, gap closed. Why is this filled? I don't want it filled. There you can see the gap. Right, not completely closed, but damn good. And then from 170 to 200, and then here again you see the consolidation going on, right? So all right, big volumes on that up move, and then if you look at it, 175 to 205, 30 rupees from here, 200, 235 to 240, maybe June, July, yeah, in that time frame. That's really good, right? The only thing is that 200-day moving average, etc., very strong, and one just has to sort of wait and watch and be patient. Uh, Given the very strong volumes, the way it went up, any and every dip should be looked at as a very good opportunity to accumulate more and not chicken out too early on this stock, right? Its lifetime high is at 300, 330. So from here to there, if it does that, uh, maybe next year, that's a 50% up move. Bank of Baroda. Okay. So not looking as strong as SBI. 140 could just collapse. 152, 150, a lot of resistances on top. A setup like this, very iffy, could go either ways. You better not even look at it, just forget about it. All right, so we're going to skip that. Let's look at some of the other big ones. PNB. All right, so PNB again could go either way, but watch for 80. What you could do is put a buy order above 81. If it goes up on good volume, and then it'll probably go up to 88 very quickly. And on the short side, I wouldn't short it, and if it does come down, I'd watch it for about 72 rupees and see if that does not break, and if it doesn't, then would want to get in, right? You look at it, it's at multi-year support 2006, 2009, and from that perspective could be a really good buying opportunity, right? Long-term investment type things. Still, having said that, one would still probably prefer private sector banks and want to, go with that. But if you are looking for potential beaten down stocks, then these are definitely, fit the bill very nicely. Just want to point out, in case you do look at this fall here, right? So suddenly it falls, swift, breaks the support, but very good recovery after that. Same thing happened in 2009, right? Big fall, breaks the support at that time, and then big, massive recovery after that. Now, what I'm just saying is that something like that happens now. One fall, breaks the support, maybe you'll see it go down to 75 rupees or 70 rupees or something like that, and then it'll just probably quickly, scramble back up. So just things to keep in mind in case you do look at this space. Just wondering if can bank, yeah, Canada Bank. Okay, just remembered because I thought I saw it do some sort of a big move sometime last. Right. Uh, right. So weekly chart, a lot of churning this week. 200 to 210. That's the level to watch out for. And once it goes to a lot of volumes today. Sorry, this whole week. Look at that. Look at that. A lot of volumes. Not sure what to make of it, so I'm going to step aside and not give any call on this or any view on this. Not a good, not a safe investment or trade, right? So looks like apart from SBI, really nothing much else to consider buying in this space, right? So okay, which is fine, done. I'm just thinking if I missed anything. Oh yeah, ITC. So that's ITC. Again, you can see the consolidation, 2 weeks. Today beaten down a bit, right? Very low volumes today when it got beaten down. And 380 should happen, right? 380 is very, very likely. Pretty erratic it's become. That's the whole thing. It has it had a nice trend from 2009 to 2015, and then consolidated for about a year, and then again it has gone up and gone up on good weekly gaps, not really gaps, but still weekly chart. That's a lot of strength, and that's good volume too, right? So all the cigarette bans and packaging, marketing, all that stuff really not taking any toll on it. And again, given its diversification and agri focus, if it has, if the monsoons are good, then this is definitely a place which is going to do well. So that's something to keep in mind. All right. Okay. And then Hindustan Unilever, big moves, right? Big volumes. You're seeing this sort of big volume stuff in a lot of stocks, right? So I'm certainly wondering. I mean, all block deals, but I'm wondering what's behind this big series of big volumes. Idea today, HUL here. Saw it in quite a few. Okay. Something is, well, definitely, is this FI stuff? I don't know. 900. So again, this is a stock which is consolidated for 1.5 years, 2015 to now. From the looks of it, I would say that, look at this last week's and this week's volume, all nice. I would say by the looks of it, this is setting itself up to go to at least 975, right? And then if it can clear that, this is a stock that will easily cross 1,000 rupees, right? Okay. Okay, so that brings us to the end of this session. So what I think is safe for the coming week is the private sector banks, the HPCL, BPCL combined. If you're looking for beaten down cane, looks good. ONGC, okay. And then on the metal side, Tata Steel and maybe Vedanta. Autos are all looking good across the board, and those would be the places to really focus on. SBI would be the other thing. And apart from, I would stay away from IT for now, right? And FMCG, HUL, okay. Um, so that's quite a big basket, right? Private sector banks, autos, stay away from pharma along the long side. That's the only thing to look at potential shorting if the market goes down. The pharma looks really, really weak. Okay, and yeah, that's it. Oh, realty. So DLF, right? So that looks pretty nice. Up move again. This is the whole thing about consolidation. When you move up from 85 to 110 in just 3-4 days, and then almost 1 month of consolidation. Again, one slow, frustrating move from 105 to 113. So some consolidation there probably, and probably will not move up in too much of a hurry. SDIL, right? So that's come to 100. Disclosure. So I'm long on that. Very good volumes when it went up, right? And then went to 100. Psychological mark has corrected from there, and today has come down. Overall, last 1 week the volumes have definitely been lower, and if you look at it from a weekly chart, bad week, right? Um, has moved up in the last from Feb very handsomely, and now maybe a week, maybe another week of consolidation, where I would expect to see 120 on this, and maybe even higher levels once the move comes back in. So this was like almost 6-7 months of consolidation, a breakout. 120 I think would be the next level to look at, right? And then eventually I think the big resistance will be at around yeah, that's at 120, correct? Yeah. Okay. Another one which was looking good was IBR, IB real estate. Okay, this was definitely something else because this is 4.5 years of consolidation, weekly chart, and look at that massive move from 50 to 100 in just about less than 6 weeks, and this is the first week of some meaningful correction and just massive volumes. If it does come to about 85, that would really be a good place to get into India Bulls real estate. So you should put an alert for that, and 85, any correction, it should then take it to 100. So that's like a doubling again. It's gone from 50 to 100, and then 100 to 200, and let it take a year to do that. That's fine, but that will definitely be a worthwhile opportunity, right? Okay, so that brings us to the end of the session. So across the board, plenty of stocks to pick and choose. Like I said, next week, just be careful of the events that we discussed, and other than that, things should be pretty okay. Okay. So RBI policy, not much expected. The surprise, if any, will be is a 0.25% cut, and that should really stimulate the market. Um, Definitely no rate hike. That will be a shocker. Um, and once that, what do you say? is out of the way. The next thing will be FOMC meet Yellen, and I think that's going to be just a lot of flip-flop on that. So for traders, short-term guys, we'll just have to write that. And want to close with going back to the NSE 50, because don't lose track of the fact that a major correction is over, and you're looking at a weekly chart, and then we are definitely in a multi-month uptrend. So shorting, not really a good idea, except looking at pharma. And when you get corrections, time to buy. And if monsoons and RBI and all that play well, then quite feasible that this year itself you will see a new, not if not a new life high, at least a retracement back to 9,100, right? Which is 1,000-point move from current prices almost. So that will be really something. Okay. All right. So with that, ending the session. Thank you very much for your attendance. And if you watch this session as a recording, please do get back to us with your opinions. And happy investing, happy trading. Just be careful of the events this month, right? Thank you and have a great weekend.